Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video we're talking about UPS. UPS has reported the earnings just yesterday, and for that reason it actually went down almost over 10%. What I want to do is I talked about it very briefly in the last video, but I want to talk about today financial side of things. Okay, we want to look at, obviously we talked about in that video why it was down, and I will mention some of these things. We'll look at the earnings report. We will look at what the analysts are expecting from this company moving forward, and then obviously look at the financials and see if we should be worried about based on what has just happened yesterday, because a lot of people have decided to sell this stock for it to go down that much. So just yesterday, last 5 days is down about 11%. For the 1 month is about 7%. For year to date is almost flat. Okay, so the company basically has, the stock haven't done anything since beginning of January. Okay, so what we want to do is have a look at this company and see if it's actually, if we should be worried about the company, or should we not worry about it at all and just add to the to our shares that we've already got. And that's what we want to start with. So I want to quickly show you what's happened, the reasons why it was down so much. Okay, and that is because of this. The earnings report, okay, so earnings per share or EPS were basically slightly lower than what was expected by 1 penny or 1 cent, for example, right? So because of that 1 cent, is actually was down quite a bit. And it wasn't just that, by the way. We'll talk about it a little bit more, but that was one of the reasons, right? Revenue was expected to be 22 point. Basically was expecting to be 23.01 billion, but it came 22.93 billion. So they missed both the earnings per share as well as the revenue. And then comes the guidelines, and that's where basically everything has changed for the company. So for example, the company said, the CEO company said, changing in consumer shopping behavior has basically led to increased spending on services and categories such as food and dining. So people are basically buying food, prioritizing basically food and dining over the things that UPS delivers. Okay, so they no longer go into Amazon and buying whatever they want, just like what we were doing during COVID times and so on. Okay. And then their projections was slightly different. So the company now expects its full year revenue of $97 billion. And previously we're expecting about 97 to 99.4 billion. Okay. And the analysts were actually expecting 99.98 billion. So closer to almost $100 billion. Okay. And for that reason, obviously, analysts do not like that. And for that reason, a lot of them are actually now saying is either sell or whatever, or basically giving a lower guidance, basic guidance going forward and so on. So that is the full story. That's basically major. And obviously, there are a couple of other things. The company, basically, the CEO, obviously, the chief financial officer has said basically 2023 is going to be a pumpy year, basically. Okay. And I can't expect that because they've already kind of talked about that in their earnings call as well. Okay. So there are also other things like the union. Basically, this is heavily unionized workforce. So they are right now negotiating. So that's still up in the air. So basically, contract negotiations between the company and the unionized workforce kick off early this month. Okay. And that is basically one of the reasons that we don't know what's going to happen. There might be strikes. There might be other things that might happen. Whatever happens, we will see. But that is not a great news either. So it seems there are a couple of negative news basically about the company right now. But when you look at, they kind of mention some of these things in their earnings as well. They have basically, you can see it for yourself. Okay, some of the basically the financials. Okay, so total revenue was lower than this time last year. Okay, about 6%. The adjusted operating profit was lower than last year's. Okay, same goes for operating margins, same goes for adjusted diluted EPS, all of that. Okay, And going forward, they have also talked about the same thing that we've just seen with the CEO talking about there. So it looks like to me that even the volume, okay, has declined. So the average daily volume has declined 5.4, which basically means they're not delivering as much as they were delivering this time maybe last year or so on. So obviously the comparison is there, okay, quarter to quarter. So it's slightly declined in the last few months. It's basically in the last 12 months. So yes, there are some headwinds. There are some situations that are going to we need to face, okay, in the next couple of next at least this time next year until 2024. But that doesn't mean this is the end for the company, okay? And this is why we need to look at now the financials and see if this is a company is a buy, because you will see all of these things. So basically, one of the companies that look at these type of companies basically have upgraded the company, basically, which is normally you don't see that in those kind of situations, but they have upgraded. But I would be expecting a lot more downgrade in the next few weeks, meaning some of the analysts that were expecting for the stock to grow whatever, but no longer as bullish as they were, and they will be, and I think it's going to trade down maybe into the mid 165s and so on, and that will be really nice for someone like myself, who I'm very bullish on the company. I will be buying more of this. I've said it in the last video, okay? And if it comes down to, like right now, my price is actually 175. That's exactly where it is, 173 or whatever it is, right? If it comes down to in the mid 60s, that will be really good. Let's have a look at the financials of this company right now. As you know, it's in the industrial company, currently trading $173 per share. The basically 5-year return is basically 52%. Okay, EPS we see $12.37. Market cap right now is let's call it 150 billion market cap. It has wide economic mode, and the beta is actually quite low. In terms of PE right now is 14. The forward PE is 15.72. That might change, we'll see. Okay, the 5-year average, okay, PE is actually 16.71. So it's actually lower, meaning it's probably cheaper than it's been in the last 5 years. Okay, price to free cash flow here, you're looking at about 16.5 as well. So all of that basically, including how the trades again relative to the sector, it seems way cheaper than the sector right now, and it is lower than 5-year average. In terms of dividend side of things, 3.68, almost 3.7 right now dividend yield, which is really good for this business. Latest increase is 6.6, which is nice. The 5-year growth rate is 13%, which is again double digits, really good. The annual payout is $6.48. That's what you will get for every share that you own. They went on the ex-dividend on the 14th of February. Dividend streak of 13 years of increasing that dividend. The payout ratio only 46%. So I don't expect a cut anytime soon when it comes to this company. In terms of dividend safety, we're looking about almost a 70%, which is really good. Free cash flow of $9.34 billion. That's probably why I wouldn't expect any cuts anytime soon. They've got enough to cover that. The free cash flow yield is 4.8%. Okay, normally we said about 3%, so that's actually good. Profit margins, return on equity, return on investment, all of those things are absolutely fine. And the total return in the last 10 years was about 10%. Okay, return on invested capital almost 25%, and then revenue compounded annual growth of in the last 5 years, we're looking about almost just below 10%. Okay, current ratio is above 1, which means basically they've got enough money in the next 12 months to cover their current liabilities. Now, this is going to change. I'm sure this is going to change. As we speak, this is changing. Okay, a lot of analysts are coming out. So this is what Yahoo average basically gives us right now. But I'm sure this will change as some analysts will come out and it's guided basically lower, and the average will probably come down. But for now, they're expecting about 8% this year, and then 3.6 basically the years after. So we will see. We will see where that ends up. But right now, I think that's still a change. That's rapidly changing basically. And according to Simply Wall Street, it's actually overvalued by 11%. They expected the price to be about $160 per share, right? According to Morningstar, it's actually 179. That's about 2% discount. And Morningstar actually has slightly made some changes based on the the earnings that came out yesterday, and it wasn't actually much, to be honest. So they said we expected to lower our discounted cash flow model derived 179 fair value estimate by 1% to 3%, as we will be tempering on our medium-term US and international margins forecast. So they would that might change in the next couple of days. Okay, but it looks like they have spoken about the 5% change in terms of the basically the daily average and so on that we've already seen. The margins obviously has slightly changed. We've seen that already. So all of the things that the company has reported, they've mentioned that, and they're using that as a reason to kind of change it maybe to 1 to 3%. So yeah, that might change later on, but for now it seems about 2% discounted right now. Target price they're expecting from Tipright is 196, which is very bullish of this. Okay, so it's about 13% upside, and same goes almost with Seeking Alpha, which is about 10% upside. 191, 196, not bad. Okay, and according to Seeking Alpha is actually a buy. Now what would I do with this company? Like I said to you, if it comes down maybe in the next couple of days, some analysts come out, they basically change into their ratings or whatever, and if their things come down a little bit, it comes down hopefully in 165, 168, whatever, I will be buying more of this. Like I said in the last video, I would love to own at least 30, 40, 50 shares of this company in the long run, because I don't think it's going to go anywhere anytime soon. Okay, and if I'm looking at about 10 years from now on, inshallah, I have nothing to worry about. In terms of the business activity from Sharia compliance side of things, you can see it's 100%. Interest bearing debt is actually about 15% right now, and then interest bearing security is about 5%. So nothing to worry about there. And they are buying back their own shares, so they're increasing the dividends, they're buying back their own shares, they have a free cash flow. Okay, and right now there might be some situation that the company needs to deal with in the next 12 months or so, but in the long run I do believe this is a great business, and I think it will be around. There will be absolutely no issues with the business side of things. Again, I'm putting my own money into this business, so if you don't own it and you're looking at it right now, obviously do you due diligence, do you research, whatever, but please just don't follow what I'm doing here, okay? Because I'm taking a risk. And again, every single stock that we buy here is a risk. If you are new to the stock market and you're still learning about it, okay, then get those ETFs, okay, to get those Sharia compliant ETFs and so on, and don't worry too much on these. You might get about 1% UPS within this ETF, right? And if UPS goes to zero right now, you lose that 1% instead of losing like what I have right now, about £3,000 or so, okay, which is quite a lot of money for me as well. Okay, but yeah, that's where we are now, and that's the company that I wanted to talk about today. There's so much news out there, there's so much negativity, but I wouldn't worry too much about it. You have your own thesis and you have your own plan for these type of things. Okay, so stick with what you've actually own already. If you own it and you want to sell it, just make sure that you know exactly why you're selling, and you're not going to buy back when it goes, because this is what I've noticed as well. I was talking to my mate recently, and he basically sold the Tesla when it was actually going down, and then he started buying when it was going up again. And I said, wait, hold on a second, how does this make sense? You lost money, now you're buying it when it's actually above the average that you sold it for. Oh yeah, because I think it's going to go higher. So what made you think then selling it at that point? Why did you, oh yeah, I was, you know, just stick with the plan, inshallah. If you have a plan, stick with it. My plan is, inshallah, to own more of this company and then see what happens. Just like all the other companies that I own in my portfolio, a lot of them are in the red right now, which makes me happy, because then that means I can actually, when I put my £250 or more every single week, I have somewhere I can put that money. Okay, that's one of the reasons, by the way, I have not added any new companies to this portfolio, because I've realized I want to own more of these companies that I already have than actually buying, you know, just the new companies, whatever. But if I find an opportunity, in fact, I'm in the hunt of basically buying a couple of more new healthcare side of things. Okay, I started as AstraZeneca very recently, so I will be buying more of this. But in terms of healthcare, I'm looking for stocks to add to and so on, inshallah, to the portfolio. Anyway, I'm going to stop there. If you haven't joined us on the Discord, on the Patreon account, please do so. It helps the channel, it helps me, it gets me motivated to actually talk to you guys, and obviously that little bit of money that you're actually spending on that actually definitely helps the channel to go a long way, inshallah. Have a wonderful day. Assalamu Alaikum.